Steve Brice, the Chief Investment Strategist at Standard Chartered Bank, joining us this morning. Steve, good to have you on with us. What are you expecting from these negotiations, these discussions taking place in Europe?
Well, I think we're going to get quite a lot of policy pronouncements in terms of, obviously trying to deal with the crisis. I think obviously the key critical piece that people are watching out for is how they're going to leverage the EFSF, or if they're going to be able to do that, because that's fairly critical to sort of ring-fence the crisis to Greece and protect the likes of Italy and Spain. So there seems to be some discord between France and Germany on that key issue. So, in the near term, I suppose from a market perspective, what we're looking at is markets have pretty much discounted a poor outcome coming into this. So the potential for a short-term rally or surprise on the upside is definitely there. But I think the sustainability of that rally is going to be called into question. We've seen, obviously, the increased flexibility of the EFSF that was agreed in July 21st only being passed last week after a near miss with Slovakia. So I think that's going to be the key question. So we believe any rally will be short-lived.
All right, Steve, before we get into how much declines might be in for the markets, let's talk specifically about some of the news flow that we're getting out of Europe. But what about this $1.3 trillion bailout fund? Is that in conjunction with the EFSF, or is it completely separate? And is this enough to bail out the countries? We're talking about what? They're going to, I guess, hold up 10% of each economy that needs cash. Is that enough to buffer what's happening in Europe?
I don't think it is. I mean, the numbers that were being touted around, obviously, for the EFSF was $2 trillion. So, and this is separate to that. So, it is. I think it's probably better than people had anticipated. If you go around, the analysts around in the market, almost nobody was expecting something significant to come out of this. And clearly, 1 trillion, just under 1 trillion euros, is a significant number. And but we're talking about mid next year again. So, I think that's going to be a challenge. So, we really do need to see this EFSF leverage coming through. Obviously, the incentives are there. The policymakers, from a good perspective, are taking this a lot more seriously than historically. So I think we will get there over the coming weeks, but whether we'll get there by this weekend, we doubt it.
All right. Well, Steve, considering we do have, it seems, more firepower in the bank for the Eurozone, why are you expecting these bounce and these gains and not to last in the markets?
I suppose it's because we don't see this as being, addressing the structural issues and taking the bull by the horns. So, we do feel that, as I say, it's a significant step. But, 17 countries have still got to ratify anything that's agreed at this weekend. It's still got to go through the legislative process. That is unlikely to be smooth. So, I mean, you're talking about where markets might go. We might get quite a significant rally in the short term, but we'd expect markets possibly to revisit the lows before we see a stabilisation.